Good morning, everyone. I'm Dawn Litchfield Brown, sitting here with Dennis Nelson, my partner of about 35 years in business. So we do tend to get along all right.
35 years, we better.
Yeah, this is NMM's news, financial news you can use. And it was a beautiful weekend this weekend, a little bit cooler. Did you have to put a jacket on?
I did.
Sorry, just makes me laugh. He always says that. A couple of things we're going to talk about today. One thing that we like to share is our experiences that we have over the weekend. And so over the weekend, my husband and I decided to stop at lunchtime, late lunch, probably 2:30, for a burger. And in a nice place, not a fancy restaurant, but a nice, not a fast food restaurant, so I won't offend anybody. And there was one waitress there. One. Outside and inside. One waitress and the owner.
Wow.
And one cook. And she was about in tears. She said, nobody will come to work. And what she said, and I think we warrant some explanation, was why would they come to work when they're getting as much money sitting home and collecting their unemployment? So we know the academics and a lot of people are saying, that's not right. Everybody wants to work. And I think everybody's right, in the right way. But the reality is, if you think about it, when you go to work for your job, you have to have your car working order, your clothes, gas, babysitters, all this stuff, right? So maybe unemployment isn't paying you as much or more than you were making, but when you take all that stuff into account, you probably are ahead of the game. And I don't know, if somebody paid me as much to sit home and just hang out and catch up on all my projects, I think I would do it too.
No way, you love this.
Okay, all right.
Well, I think that kind of feeds into what the last employment report was. They were expecting 1 million people went back to work, and it turned out only 250,000. I mean, that was huge.
Yeah,
it got everybody thinking, what is going on here? Well, it's pretty obvious.
Well, this
Just
is
what you said.
It's going to be this, but I think this is where it leads into inflation and how we're going to see one of the leading indicators of inflation, of course, is wages. And if people want people to come back to work, they're going to have to increase their wages. Now that also trickles down to the product prices will have to go up. So there's some underlying inflation here. I don't think we can get around it this time.
I think there is. My wife and I went out for breakfast after church yesterday, and breakfast cost $40 for the two of us. Now, I don't know, $40 maybe isn't a lot of money, but I choked on it.
Well, yeah, we ordered Chinese last night. Don't tell anybody that. Okay, because on our eating plans, right? We had Chinese, and so I didn't even get a meal. I just got an appetizer, right? We've got 2 appetizers, a meal, and a Dr. Pepper, and it was $60. And we were freaking out. We were like, no, this is Chinese food,
Right.
But, okay, let's move on. We're going to take up too much time. What do you have for us today?
Well, I wanted to talk about a Barron's article a week or so ago, and they called a big money poll. Excuse me for stumbling over that. I couldn't read my own writing. A big money poll of
Pool
investors.
or pull?
Poll.
Poll.
P-O-L-L.
Okay. Oh, P-O-L. Yeah.
And this was a survey of big money, which of course would be mutual fund people, hedge fund people, and the like. What did they think the market was, and where do they think we were going? And 67% were bullish.
Thinking things are still going to keep going up.
Things are still going. 26% were neutral. So we got, between those two numbers, we have almost 100%. And for contrary thinkers like myself, you say, well, that's got to be the biggest sell signal I ever saw in my life. But even they admitted that 64% of these people saw the market as overvalued.
So while they think
they're
it's
still
probably,
bullish, right?
yeah, they think it's going to go up, but they're not ready to put their foot in, put more money in.
Maybe that's it, or at least this level. But an undergoing theme on this was that value was where you wanted to be. Energy stocks or value stocks, and you get into that. What's value? What's growth, etc. But the fact of the matter is, there's some pretty pretty strict guidelines on this. Financials are almost always value stocks, and they were the favorite sector of the group that we're talking about. These big money investors.
Sectors just change so fast these days. I thought it was fast a few years ago. Now it's, used to be they changed every quarter. Now they changed every 2 weeks.
Well, we saw a big change, just a 2-day change here last week, when all of a sudden the growth, the tech stocks went crazy on Thursday and Friday.
Right.
Back from a long sell-off period, but it's pretty neat when you look at what kind of sectors are out there, and they're calling value the new growth. And you kind of think this through a little bit. Now, we've been involved with Freeport-McMoRan, a copper company, a copper miner. Now, if there's ever such thing as a value company, this has got to be it. They dig in the ground for what they produce. But when you think about it, copper is being talked about as the new oil. If you're going to get energy from one place to another, for instance, from a utility company to your electric car, it's got to go by copper.
Interesting.
And the amount of copper that's put into just these charging stations is huge. So, it's not like these charging stations are free or easy to put together or cheap to run. They're not, but they're going to be replacing gas stations.
So
Eventually, I think probably so.
So does that mean any of the old pennies are now worth 2 cents?
I was thinking about that.
Right?
When I emptied my pocket of change and there was a bunch of pennies in it, I was thinking, that penny might be worth maybe a nickel.
Well, exactly. I mean, it's all copper. The ones that are all copper. They're not anymore. Some of them are nickel, right? But they have half nickel or something.
I don't know. Is that right?
Well, that really leads to a lot of things, because you're talking about numbers and markets and how people are trying to take advantage of what's out there today. And the way we look at it's a little different. So some of the things, I'm just going to read them off quickly and we'll stop. But it says, you see, there's a big difference between managing money for clients and managing money for the markets. Yes, the markets matter in this equation, but they certainly shouldn't drive every decision of the plan. And here we're going to talk a little bit about that. There's a big difference between a collection of securities and mutual funds in your portfolio and an actual investment plan, one that works for you. There's a big difference between financial advice that sounds good in theory and financial advice that works good in practice. And after 34 years, and you look on our website and listen to our testimonials, they work in practice. That is what is so important. There's a big difference, as we all know, between short-term tactics and long-term processes. Key words there, not long-term tactics, but long-term processes. Big difference between trying to outsmart the financial markets and trying to reach your own financial goals. We have a couple clients that are just so grounded with that, and it's such a pleasure to work with them. And finally, there's a big difference between what is the best investment strategy and what's the right investment strategy for you. And that's really what it boils down to. What's good for this goose is not always good for the gander, right?
Yep.
We also want to remind everyone to subscribe to our YouTube channel. Our website is still under soft launch, so please take a look at it. It's not the one with the great big owl on the front page anymore. But scroll down, and we'd appreciate all your thoughts on that. Dennis, any closing words?
Well, I like the process part of what those that you were reading through. Process is so important when structuring a portfolio and structuring it for the individual.
Right.
It's the process that counts.
Well, if you think about making a cake, you can have all the right ingredients, but if you don't put them in the right amounts and at the right time and do it the right way, you get a big old flop. And that's what happens to your portfolio.
Okay.
So we hope to talk with you next Monday. Remember, money matters, but most of all, and most importantly, and most always, you matter.